Good afternoon, everyone, and welcome to the Treasury Strategies webinar, Getting Value from Your Account Analyses. I'm Kathy Gregg. I'm a Managing Director here at Treasury Strategies, which is a division of Novantas. And we're going to talk this afternoon about an area that has truly defied an easy solution over the years. But I think we've done it, and we've got some high points and suggestions and good ideas for you this afternoon. Just logistics for our webinar. Everyone that attends will receive a copy of the deck that we're using and a link to the recording of the webinar. Also, at the end of the session, I'm going to give you information about how to get more information if you have questions, but also feel free during the webinar to type your questions into the box at the bottom right-hand corner of your screen. We'll gather up those questions at the end of the webinar and answer them in an email to everyone who participated, but we won't take time during the webinar to deal with those in as much as we only have 30 minutes today. So, before we get started talking about account analysis and our ideas for how to make this a really productive area, we'd like to conduct a short poll just to see what everybody's doing currently. And we have 4 options here. So those of you who are corporates, if you'd answer the poll question, what are you doing for a bank account analysis review process now? Do you just eyeball them? Do you use spreadsheets or some other tool? Do you review them every now and then when there's time? Or do you not review them at all because we're going to end up paying again anyway, it's just a cost of doing business? If you take just a quick second and answer this poll, and then we'll do a summary of the responses real quickly afterwards. So Joe, is the poll open here? Okay. And Joe's going to keep it open for a few seconds while people are answering. What we're trying to do today in terms of more easily understanding your account analyses is give you some ideas for how to do some logical comparison across your different product families and across your different banking providers, looking for opportunities to improve either your account structure or the way you allocate your services or the value you get for your spend, looking at variances month to month and how those can be useful to you in managing your banking system, reviewing your balances and your compensations easily. We already have about 100 customers on the product that we use for this, and we're going to share some of what we've learned from that process. Okay, so it looks like we have our findings here. About 6% of you eyeball, 40% use spreadsheets or some other tools, 5% review when you have time, 3% don't do anything, and 45% no answers. So I'm going to guess that the no answers are people from banks or other organizations or who aren't involved in daily account analysis review, monthly. So if we took that group out, it looked like the vast majority of you are using spreadsheets to do this. So you know what a gratifying and exciting task this can be from month to month. So hopefully you're going to get some great ideas for saving yourself all of that key entry and enjoyable spreadsheet work. The NDepth product that's giving us the ideas we're talking about today is an automated solution that takes in your account analyses, easily translates the information into data that you can use and work with and actually analyze, gives you benchmark on costs and ECRs, looks at variances, helps you untangle your ECR balance assessment fees, and in general lets you spend your time managing and improving your bank account network as opposed to just dealing with the data. It is the only product on the marketplace that we're aware of that takes in both electronic account analyses, the EDI 822s, as well as PDFs. We've developed technology that automatically reads your PDFs, which takes away a lot of the work involved in getting your analyses ready to analyze. It does not require any IT. It's not an installed platform in any respect. So it is incredibly simple to set up and very, very easy to use every month. Basically, here it is. You upload and then you download. That's how much work there is. So easy for you. So let's get into an approach for getting into your account analyses and trying to wring some value out of them. The first step we suggest is that you consolidate individual line items into product families. Now, you all know there are hundreds and hundreds of line items on your account analysis every month, and yet you don't buy hundreds and hundreds of services when you think about it. You probably buy something like no more than a dozen or 15 aggregate products from your banks, and yet you have all these hundreds and hundreds of individual line items. Too much detail to really make sense of. So the first important step is rolling those line items up into the product categories to which they refer and belong. And once you've done that, then you can start doing some meaningful comparison. Now, a couple of the key success factors in doing this is, first of all, knowing which line items belong in which product families. And at Treasury Strategies, because we've been working with account analyses for what seems like hundreds of years, we have figured that out for every bank, which of their line items go in which of the product families. Another key to making this data into submission for you to be able to get value out of it is knowing which line items actually count volumes. As you're probably aware, if you have your 30 or 40 line items that constitute one product family, if you added the volumes of all those line items together, you'd be grossly overcounting how much of whatever it is you're actually buying. You have to know which of the line items count the volume. And that's another thing that we have worked out at Treasury Strategies. We know for every bank, for every product family, what service codes they use that actually constitute volume counters. So in the chart that you're seeing here, for example, account maintenance in the account services product family has a star by it. That means it's a volume counter. And deposit services product family, the item check deposited has a star, which means it's a volume counter. So this is an example of how we apply the line items into the proper product family and identify the volume counter line items. Here's the same information just for the account services product family. The next thing we do is think about the aggregate expense that's being incurred for that product family. So for 24/7 bank, you have these 5 line items that constitute the account services product family. They total $274 for the month. So across that product family at that bank, you have a total spend of $274. You had your volume counter of 5 accounts. So your average effective unit price is $54.70. Once you've got that information for all your product families for all your banks, now you're in a position to really do some analysis of these account analyses at a meaningful level. So first of all, we suggest you start looking at your aggregate product family spend. And again, in this example, and by the way, this is a sample company, but the data is taken from real account analyses. So it's actually a conglomeration of a couple of companies, but it's real. In this company, they're buying about 8 different product families across their 5 different banks. But in the totals that I've circled, you can see that most of their spend is on only 3 product families. It's on ACH, wires, and lockbox. And so if I'm looking at these analyses and trying to find some opportunities in them, I'm going to focus first on my big spend areas. So I'm going to focus on ACH, wires, and lockbox. And here's another view of that. I've got 2 banks that I'm using for ACH, Mustang and Tri-Central, 4 banks for funds transfer or wire transfer, and 3 banks for lockbox. And you can start comparing your total spend across your bank for each of these main product families and start seeing some interesting differences that raise some questions. Let's dig down into the wire transfer example and see where we could go with that if we were actually analyzing this for the month. So we're going to be comparing average per item costs across our 4 wire transfer banks, and I've highlighted this on the slide for you. I can see that gee, I have very low volume at First Digital and at Tri-Central, and I have really pretty healthy wire transfer volume at my other two banks, Mustang and Western First. And I'm also looking at my effective unit prices. Now, normally you'd expect to see your highest unit prices at banks where you have the lowest volume, because no volume discounts have kicked in, and because you have probably in every product family some fixed fees that have to get spread across all of your volume. And when you have only a little bit of volume, those fixed fees contribute a lot to the cost. But that's not the way it's working here. Your lowest price is not at your highest volume bank. Your lowest price is $12.80 a wire, and it's at one of your banks where you have fairly low volume. Whereas if you look at your two high volume wire banks, you're paying $16 and change or $17 and change all in per wire. Now that's kind of strange. And the first thing I might think of in looking at this data is, well, hey, if I could negotiate a better price at my high volume wire banks, or if maybe I'm able to move my volume of wires to that bank that gives me the lowest price, I could probably save some real money. And in fact, if you do the math here, and if you did move all of your wire volume to Tri-Central where you have the lowest price, you're going to be surprised when I tell you this, you would be saving over $100,000 per year on wire transfer fees. All right? Now, I'm not saying that you can actually do that, and I'm not saying that you can actually get that price, but it's certainly a big enough number that, hey, maybe I'm going to check this out and think about, is this an opportunity for my company to really save some meaningful money? So this is a great hypothesis, but it would help you out a lot probably if you knew what prices are realistic in the marketplace. For example, maybe Tri-Central is just unrealistically low, and that's not something you can attain anywhere. So how are you going to figure out what are realistic prices in the marketplace? Well, here's another way that our NDepth product can really help you by giving you price benchmarks to compare your pricing to the overall marketplace. These are not pieces of information that come out of a survey. These curves are derived from current and up-to-date price-volume combinations that actual companies are receiving now. I don't think there's anybody else in the market that can do this. It can show you benchmark information like this. It's really a phenomenal breakthrough. And you'll notice, of course, that these are curves. They're not points. Lots of times when you're looking at benchmark information, you'd get a piece of information like the average per item price for a wire transfer is $10. Well, you don't know if that's for a company that does 2 wires a month or 200 wires a month. The volume is a really essential part of a price benchmark, and that's what we've done at Treasury Strategies. We have calculated the pricing curves based on a combination of price and volume that gives you the best possible representation of what market pricing looks like. So the top blue line represents the 75th percentile, the red line is the median, and the bottom blue line is the 25th percentile. And we have price benchmarks like this for several product families coming out of NDepth. Now, back to our company example. I've circled a couple of their stars here. The stars represent the price volume combinations that they're seeing at their actual banks. And I want to focus in on the 2 stars on the far right that are right around the $15 per transfer mark. Those are their 2 highest price wire transfer banks and also their 2 highest volume. They're not the 2 highest, they're the middle prices, but they are the highest volume banks. So we said before, if we could get our prices down to what Tri-Central Bank is charging, that would save us about $100,000. And is that realistic? Well, actually, the realistic market price at the 75th percentile level, so that's pretty high anyway, for this kind of volume is under $10 per wire. If you could get that kind of a price for this volume, your company would be saving $200,000 per year. Okay, so now not only is it a good idea, but we have some good, solid information that tells us there should be some market competitive prices that let us save a substantial amount of money. And this is a good example of how you can use your account analysis review process to help you develop ideas to improve your banking services spend. Another way to look at this information is visually. And I am a visual person. I like looking at things visually. It helps me think of different ways that I might be able to improve my network. And again, what I want to focus on is my high spend products, which I've highlighted with some black arrows down on the bottom of this chart. So let's talk. We've got the green pieces of the pie represent how much I'm spending on ACH at each of my 5 banks. And you can see I have 2 banks where I do ACH. And if I think back to the previous slide where this was shown, you may not remember it, it's not important, but one of my banks has 4 times the spend of the other. So one thing I might start thinking about is, well, if that's the case, maybe I could move all that volume into one bank and save some overhead costs, some fixed charges, and maybe also pull together enough volume that I can qualify for a different pricing tier. The yellow slices of the pie represent Wire's business. And we've just talked about Wire, where we had 4 banks we're doing wires at. 2 of the banks we have a lot of volume at, and 2 of the banks we have very little volume at. That's another thing I might ask myself. Maybe at those banks with low volume, maybe I can move that volume to the other banks and just simplify my whole funds transfer structure. And then my other big spend area is lockbox, which is pink on these charts. And I have 2 banks where it looks like I'm doing a fair amount of lockbox business, and then the far one on the right at Western First, I have this little teeny tiny slice of lockbox. And once again, now I'm thinking, why do I have that little bit of lockbox hanging out there by itself? When you set up your banking network, you probably didn't try to spread your services out as much as possible, like have a little lockbox here and a little lockbox there. You probably picked just a couple of banks that agreed to provide you the best package of services and features, and you put all your business there. But somehow or other, we ended up with some straggling out at Western First. Maybe it was an acquisition. Maybe a subsidiary opened up that lockbox and you didn't know about it and you're kind of stuck with it. But at any rate, looking at these visual arrays of your bank spend gives you ideas like that for how you might want to think about improving your system further. Another way you can do that is by looking at variances. This is an entirely different concept, but it's still pretty useful. NDepth produces an automatic variance report every month that compares last month's per item price and last month's spend. So you can look at changes that are driven by both pricing alterations or volume alterations. And you really don't know what's in here until you dissect it a little bit, but the report is intended to give you clues for where to look. So wherever you see a red box or a green box is where you have a month-to-month variance that's greater than the minimum threshold that you've selected. So let's just look at the first couple that I've highlighted with blue circles. These are examples where the price of the service actually doubled between May and June, went from $10 per item to $20 per item. I don't know whether we knew that was going to happen or not, but it did. And now the question is, what should I do about it? Well, fortunately for me, the volume of those services that I purchase is very low, so my pricing impact is very low. And I might say, hey, I don't have a lot of time in the day. I'm not going to go chase these down right now. But if my volumes were big and the price had doubled, that might be cause for some serious investigation. What's going on here? Down on the bottom, looking at the other blue circles, the prices haven't changed, but the volumes have changed. At this particular bank, outbound and inbound wires increased pretty substantially over May to June. Now, that may be perfectly normal for your business, but maybe it's not. I mean, maybe you had something going on with the payable system and a lot of checks didn't make it out in time, and as a result, a number of things had to be paid by wire. Who knows? But you spent a lot more money in June than you did in May on wire transfers, and it may be something worth making a phone call about to find out if there was something operationally wrong that you want to encourage people to take a look at so it doesn't happen again, so you're not spending that money again. You can also use a report, you can also use a report similar to this to check your contract prices. So if instead of comparing month to month, you set up your baseline as the contract that you have with your bank, then you can compare each month's prices to the contract to make sure that you've actually qualified for all those contract prices. Okay, now let's move into the arena of bank balances and earnings credits. This is a whole complicated arena unto itself, and it's a big part of making your account analyses work for you. I've got a report here that shows you balances, services, and earnings credits for the month for all your banks in one place, which is a really nice way to look at it because you can look for the outliers. If I run down that ECR column right in the middle of the page, I see everybody is a double-digit ECR and above 0.3, except for Tri-Central Bank, where I'm only getting a 0.05% ECR. So, kind of an outlier. Might want to explore that and, see whether there's opportunities to do something different with TriStar, because that's really very low. And I have relative, for my company, a $6 million collected balance is pretty big. So getting a really low ECR on that could be kind of a painful experience. Again, I'm going to ask the question, but let's think about what do you think market rates might be? Is TriStar really off the market? And once again, we have something that's another completely unique feature. We've got benchmarks of ECRs. And this report is constructed the same way as the previous benchmark curve that I showed you, except it slopes up to the right because it's interest rates. And this little star, which represents your relationship at Tri-Central Bank down there at 0.05%, yes, you can see, relative to the market, that is below the 25th percentile for ECRs at that balance level. Once again, just like that other chart showed you, these are not just ECRs at a point in time without regard to the balance level, because at many banks, if you're talking about leaving a more robust balance, you may get a more robust ECR. So if this is, for me, again, I said at $6 million of balances, it's a high balance bank for my company. If I was getting the same rate from TriStar as I am for my highest ECR bank, that would be worth $35,000 more a year for my company. So, hey, that's a meaningful kind of addition, and maybe I do need to talk to them about what would be required for me to qualify for a better ECR. Now, caveat all of these things. They're just ideas that have to be investigated. It is not a guarantee in any respect, and there are some other factors that come into play. For example, if you have credit issues, maybe you're not going to get the best ECR in the book because the bank is happy just to be lending you money. Things like that. There are relationship kind of factors that go into determining these rates. All right. Another thing to look at in the balance world is something called the balance assessment rate. And in this chart, the top of the chart shows you earnings credits, your balance assessment fee, and then at the bottom calculates what that balance assessment fee is in terms of a rate. Many companies are not aware that they are paying a balance assessment fee. Their bank is charging them this. In fact, we've done an analysis of over all the companies that are using our NDepth product, and we have learned that 17% of their total bank spend is going to the balance assessment fee. It is a huge number. You really need to get your hands around this for your company. It can be a separate charge, as it is on a lot of account analyses, or it can be represented as a haircut off of your ECR. It differs. Sometimes it's charged on your collected balance, and sometimes it's charged on your ledger balance. If it's on your ledger balance, then actually you're paying the balance assessment fee on your float as well as on your collected balance, which can really raise it up. Imagine at your lockbox bank where you might have a lot of float, your balance assessment fee can be really, really substantial. And as you see in the two banks where I've highlighted at the bottom, both of them start out with a pretty respectable ECR, 0.51 and 0.30. Then when you subtract the balance assessment rate at those two banks, you end up with negative effective rates. In both cases, basically, for that month, you were paying your bank to keep your balances there. All right? You've got to watch this rate. And the NDepth product makes it easy to do. But whether you use NDepth or not, you got to have a look at it. The last thing I want to just point you to is an area, again, this is the final unique feature that we're using in our account analyses process. This is the wallet examination, the wallet share comparison, where we're looking across your banks and saying how much of my wallet, how much of my total spend or business do I allocate to each of my banks in terms of credit, services, and balances. Now, not everybody in Treasury Management does this, but it is important for your banks in your credit. They are looking for additional aspects of business with you if they're part of your credit. They're looking for service business. They're looking carefully at the type and level of balances that you're leaving with them. And where you end up in this wallet analysis really could have an impact on the kind of ECRs you get, on your bank's willingness to negotiate your prices, et cetera. It is a big factor. So once you get to be able to do this wallet share analysis, I think you're going to find it can be a more valuable part of your discussions with your banks. Now, I've highlighted two banks here where things seem to be a little out of whack just looking numerically. At Mustang Bank, here we have 10% of our credit, but 40% of our services spend goes to that bank, and a quarter of our balances are at that bank. Whereas old Tri-Central, to their right, 40% of our credit is coming from Tri-Central Bank, but I'm giving them only 8% of my services business and about 28% of my balances. This could impact the whole tenor of my relationship with both of these banks. I mean, I might find that Mustang Bank is willing to bend over backwards for me, and Tri-Central is a little more reluctant. Who knows? All I'm saying is, once you have this information at your fingertips, you know how to talk about it with your banks, and it can be an interesting factor in your discussions. Okay, so just in summary, why our customers love the approach that we've outlined here, the model that we've shown you here. First of all, it takes away the time-consuming work. You're not spending your time at the spreadsheet trying to key enter stuff off your account analyses. Information goes into product families without you having to lift a finger. It gives you time to analyze instead of messing with data. People have told us how tired they are of trying to do this manually in Excel. They still do it, like so many of you said in that little poll at the beginning, but this takes away all of that really enjoyable work. And it gives you some really awesome Tableau-generated data charts to work with. In NDepth, our customers are saying also they can see the important things more clearly. They can focus on them. The benchmarks help them focus. They can focus on ECR and the balance assessment fees. They can easily get ideas for improving their product spend. And finally, they are getting value from using this. They can check their contract pricing. They've told us that they watch those variances every month to see if there are errors or new line items cropping up. They're improving the quality of their discussions with their banks and actually saving money. This is what we're hearing. We actually have some customers on the webinar today. Thank you so much for joining in. So in closing, what do you do next? Well, sign up today for NDepth. That could be one thing that you do. We have a couple of packages, different packages. Which one of these would be right for you? If you're a small company with modest spend and you simply want some better control, NDepth Lite could be right for you. It's free. If you have one or two banks, this could be a really good product for you. Most companies will probably find NDepth Edge is their best bet. If you have an average-sized bank network, you want to look at those price and ECR benchmarks and variance reports. NDepth Edge is extremely good value for you. And finally, if you're a large company or have a very robust banking network, if you want to look at contract pricing every month, if you need to customize how you produce your reports or how you want to look at the data, or report on subgroups or send out bills or something like that, NDepth Pro is for you. 10 banks or less, still at a very reasonable fee. So talk to us about which one of those works for you. If you wanted to sign up for NDepth today, here's the website you'd go to. It's an easy online onboarding process. If you just want more information and you want to get that online, here's a different website that you can go to and download some information, more information about the product. And if you have questions of any sort or you want to ask more about the product features, please talk to Jill Selgrad. You can either email her or telephone her, whichever is your preference. So I hope that today we've given you some good ideas for how to really add some value in managing your banking network through your account analyses. And we look forward to talking with you, engaging with you about all of these ideas in the future. Thank you so much for joining us today.